Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, June 25th, 2021. And our top story today, retail traders increase their pull on the market. Well, joining me now to discuss this and a lot more, Tara Falcone is the founder of Rise Up. Tara, great to see you again. Thanks so much for joining us on the program this morning.
Yeah, thank you so much, Jeff. It's always great to see you too.
Yeah, I know you and the folks at Rise Up have been working real hard, enhancing your business, working with a lot of higher education institutions, but also now kind of looking at more the retail investor.
Yeah, that's absolutely right. So, for the past couple of years, we've really been focused on helping college students establish a general personal financial foundation, which includes investing, but really focuses a little bit more on, budgeting and taxes and the core aspects of financial health that somebody should be worried about at a young age. But now looking at the retail market, especially, putting my former hedge fund analyst hat on, I'm seeing some opportunity in the retail investing space to help this new generation of retail investors take more intentional action with their investments rather than following the herd, which is a lot of what we've seen in the past year.
Yeah, and you bring up a really good point. And I want to get to that herd. That herd, is it H-E-A-R-D or H-U-R-D? Anyway, that herd mentality, you look at 2020 was the year of the pandemic, but also the year of new individual investors. Over 10 million new brokerage investors just in the first quarter or first half of 2021 alone. So there's a lot of people out there, Tara, who are out there trying to find stocks, maybe got bit by the stock bug. They were home doing a lot of analysis, hearing things. I want to get your reaction to that.
Yeah, it was a really interesting behavioral finance era or epic to be a part of and to observe. What happened was you've got this entire generation of young people who have been hounded on that they should start investing. They should start investing early, right? The personal finance community has done what it should do, which is to tell them to start investing. However, even pre-pandemic, the valuations seemed a little frothy, which is, to say something about that now. But, they've been told that they should start investing. And then you've got companies like Robinhood and others that have really, quote unquote, democratized investing and made it much more accessible to the average young person. They've put it right on their phones, and that's where young people live. And then all of a sudden you saw the stock market drop. And so, these young people saw, hey, this is my chance, right? This is my chance to make wealth in the same way that maybe, previous generations before me were able to do. And so they really jumped on the bandwagon. However, that access had not been appropriately coupled with satisfactory education about investing and what even just a stock's price means, for example. And so a lot of these investors are really just flying blind. And that's why you see this herd mentality, is because they assume that they don't know enough. So they're looking for somebody else that they think knows more, when in reality, that may just be, a wolf in sheep's clothing that doesn't know more, but is trying to incentivize them to do something specific for their own financial gain. So it's kind of a hot mess, if you will, right now. And we at Rise Up are doing what we can to try to steer people in the right direction.
And you bring up a lot of good points. Let's talk about GameStop and some of the lessons there. You mentioned Robinhood, GameStop, Reddit. That's a forum for those people watching the show. If you're not aware of Reddit, that is a forum by which people can communicate. There's all sorts of threads. And in particular, when it comes to GameStop, there were some Reddit users who were basically saying, we've got to support GameStop because on the other side were hedge funds and hedge fund traders looking to kind of sink that particular investment. But what did you take away from this? Obviously, there's an opportunity here with retail investors, but how do you see that all kind of shaking out with GameStop in particular, Tara?
Yeah, I think there were a couple of things that were really fascinating to me about that. One was just how the lack of education has really led people, these new investors, to think that buying a company's shares means that you're supporting them somehow, or that is a way to help them survive. And that's not necessarily the case. In some cases, you can be doing more damage than good. The market is, there's a bit of Darwinism in the market, right? If a company can't evolve to the current marketplaces and forces and demands, then maybe that company shouldn't exist. exist anymore. But that's neither here nor there. The other thing that I thought was really fascinating was how bifurcated the market was when it came to how men were approaching this and then how women were approaching this. So just anecdotally, I would have guy friends of mine who know what I do for a living, right? And they would have never talked to me about money before. All of a sudden were texting me about, all of these out of the money calls that they were buying on GameStop and all these things that they were doing. And I was like, do you even understand what that means? Right. And they were just trying to be part of the crowd and trying to, take advantage of that momentum that was happening. Meanwhile, most of my girlfriends were privately DMing me being like, hey, Tara, what's going on? Can you explain this to me? Like, I'm 5 years old. And do I even need to pay attention to it? So whereas guys were all jumping in, diving in, shooting first, asking questions later, women were taking a very different approach to this and wanted to understand if it even applied to them. And so, from my perspective, that's really interesting as, we're designing an app for retail investors, specifically women, but not exclusively women, but specifically kind of with women in mind to try to get more women into investing because only about a quarter of brokerage accounts today are owned by women. And so, trying to tackle that issue. And it was a really interesting behavioral finance case to shed some light on maybe, how female investors act differently and approach the market in a different way.
Well, I can tell you, I'm a male, but I identify more with the women. And maybe that's just life lessons, experience on my part. I lived through the tech boom in the late 1990s into 2000. I saw that explode, and so my trigger is, let's watch and see what happens. And then once I understand it, once I understand the valuations, once I understand the market, I'm gonna test the waters. Because I think that experience teaches you that. So I'm on the side of the ladies here. I think they're being much more prudent. Tara, I guess last question for this set of the segment. Education. How do you approach education? Men, women, young, mature, different types of retail investors. Some have money, some don't have as much money. They have houses, debt, you name it. How do you approach it?
Yeah, it's a great question. I really think that education ultimately needs to meet the audience or the user wherever they are. So on the younger side of things, maybe they have lower amounts of money to invest, you really need to teach them the core principles of investing. So even if it's just, $1 in a fractional share that they're investing, they actually understand what they're doing and they're forming solid financial habits while they're, investing small bits of money. Because frankly, if you can't manage $100, you can't manage $100,000, right? So then as somebody gets to an older stage, maybe they've got more discretionary income to invest, then it's really time to start taking those core principles and helping them understand how to apply it to their unique financial goals. And that's really what we're always focused on at Rise Up is really, okay, what are you trying to achieve from this? What is the reason that you're even starting to invest or that you're maybe buying some of these meme stocks or whatever? Because there is an intention behind your action, whether you're aware of it or not. And so making sure from a financial planning perspective that they understand, what they're trying to achieve and that they're using investing in a disciplined way in order to achieve that goal or those goals if there are multiple. And so it really takes somebody from, just basic core financial principles and investing principles to, okay, how can I leverage this for my benefit? And that's really the kind of the corporate transition that we're in right now too, is having, taught these core principles. Okay, how can we now apply it to the market that we're in today and to this increased demand that we're seeing from retail investors?
Yeah, really good advice. I hope people out there are listening. Tara, I need to take a quick break. When we come back, we'll take a look at what regulators may or may not do when it comes to meme stock investing. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Tara Falcone of Rise Up. Tara, thanks as always for staying with us.
Of course, it's my pleasure.
Yeah, it's always great to chat with you and great to get your input on education since you're really have your boots on the ground and your ear to the grindstone, so to speak, in terms of what's going on, what people are thinking. Let's talk about SEC, Securities and Exchange Commission, and what may or may not happen with regards to regulation on some of these meme stocks. Is there a role for government here? I mean, I hate to get all wonky here, but is there a role for the SEC to consider when it comes to GameStop, meme stocks, investing, and trying to protect the investor?
Yeah, it's a great question. It's kind of the $100 million question these days, or even higher. I think there absolutely is a place. They do have a role in this, in that, you know, they've been regulating what certain publishers or actors or investors have been able to say for, you know, decades. However, now I think the SEC has been caught a little off guard, and that they didn't think that this was going to be such a social phenomenon that, you know, all of a sudden had all of these channels, including Twitter, Instagram, TikTok, et cetera, where people were now starting to talk about their book, right? Instead of, you know, just on TV or just through 13Fs or any of these other kind of regulatory filings or places where you have to be a little more mindful about what you're saying. So I think it's very clear that the SEC does not have the bandwidth nor the capabilities to be policing all of this. And I don't think that they necessarily need to police all of it. However, I think there really is a big disparity between, you know, what a sort of institutional investor or somebody on a site like Seeking Alpha, for example, the types of disclosures that they're required to provide, meaning, you know, hey, I do own this stock, or I plan to trade it in this way within the next 72 hours. That way, whoever's reading that information has an understanding of, you know, the incentives behind the keyboard, right? Whoever's writing that, maybe how they're incentivized or what may be biasing their information. Whereas right now, you know, Elon Musk can tweet about Dogecoin, and you really have no idea whether he owns it, whether he's planning to own it, whether he's just trying to pump it and sell. You have no idea, and that applies to, you know, people that are, you know, just tweeting or you know, making content from their basement or wherever that might be. And so I think the disclosure side of this and the requirements on that side is what I'm really looking for, because as an investor myself, but also as, you know, somebody who is really an advocate for small investors and tries to champion for them, I think that's really, you know, point number one of what they should be thinking about is, okay, I'm receiving this information from somebody who right now is maybe not a you know, stereotypical credible source. Let's say maybe they don't have credentials, they don't work for, you know, a big bank, or they're not on TV, or somebody that's looked to as a trustworthy source. How can I understand what's incentivizing them? And disclosures are really the only way, so long as they're accurate disclosures, to be able to do that. So I think, you know, requiring some type of disclosure and policing that may be a first good step. But, you know, I don't have all the answers either. That's just one idea that I've come up with.
Well, I think you bring up a good point. And certainly, disclosures probably be something that the SEC and those regulatory bodies would probably have to require. When you take a step back, though, Tara, and you think about, what all I know of TikTok, I don't use TikTok, is it was originally a platform for showing off dances. Now people are getting their financial advice through TikTok. You mentioned other platforms, Instagram, Twitter. Are those, when you're a consumer, not only a consumer of buying goods and services, but a consumer of information, it really is incumbent upon you as an individual to make sure that you're thinking through what you're exactly describing, which is, where's this person coming from? Do they have an agenda? And what should I do with the information I'm being handed? And it seems to me that a lot of people need to be reminded about that, whether it's through disclosures or just in general. You're on a social media site that is designed, supports people going viral in order to subsidize themselves with some type of income.
Yeah, you're absolutely right. And I think it's interesting that, the FTC requires any sort of affiliate link to be, prominently displayed or disclosed at the very top of an article, for example, or, they've gone through Instagram and said, hey, if you're an influencer and you're promoting a product that you're being paid for, you have to have hashtag ad or sponsored, so that the consumer is aware of what's happening. However, none of that has transferred over to the investing space right now. And so you've got, people on TikTok, for example, in some cases, like 18, 19-year-olds who have absolutely no financial experience, just talking about, their book or trying to hype up GameStop or AMC, or, what have you. And I think there absolutely needs to be some kind of crackdown there, because while the person who's publishing that information may not think that they're providing individualized financial advice, because of the, sort of personal relationship that a lot of people feel to these people through social media platforms, the person on the other side of that screen who's receiving this information does feel like it's individualized financial advice, and that they're being told to go out and do something, or, hop on the bandwagon or be part of this movement. And that's really where the SEC comes into play, and what they start to require as somebody who is, just being exempt from a publisher's perspective to all of a sudden having to be registered as an RIA because they're providing individualized financial advice. So I think there needs to be a really strong definition of what is considered individualized across different platforms. And then they need to start policing people that may be telling people to go do a certain thing, and telling them, hey, if you're going to be doing or saying these types of things, you need to be registered as an investment advisor. And I think that's going to naturally weed out a lot of the people that are maybe doing that. But of course, if those disclosures aren't there, if that information isn't made very apparent, how is the consumer to know, right? Like I said, in another segment, the education side of investing has not kept up with the pace of access. And so, it's not really like, we can't really fault these new retail investors for not knowing any better, because how could they, right? Nobody's taught them to know any better, and they can't know that just naturally on their own. So if we aren't, being there to try to safeguard them, or at least give them proper information to make educated decisions for themselves, then, that's on us, I guess, as educators and regulators to be doing.
Yeah. And we haven't even seen any litigious activity yet as a result of this. And that seems to be, that is a natural part of the market too. If people steer people with the wrong and erroneous information, they can be, even if they're not a financial advisor, they can be sued because they provided wrong information and had an impact on the market. So Tara, I would think that we might see down the line, and maybe that we just like we've seen in the 401k retirement industry, lawsuits, we might see lawsuits as a result of meme stock investing as well.
I think absolutely. You may see it from two different directions, or targeting two different types of people. You've now, maybe seeing some, financial influencers or, content creators that are steering people into risky penny stocks, let's say, or these meme stocks. And then, the person who follows them towards the end or a couple days into this stint maybe gets caught holding the bag as the rest of the market, the tide kind of goes out. So you may see some litigation there. I think you also may see some litigation and we're already starting to see maybe some class action lawsuits against companies like Robinhood, for example, who are having to make these decisions that maybe they never expected to have to make from a liquidity perspective, where, they're preventing some of their users from continuing to purchase certain stocks, meanwhile allowing people to sell. And the people who, own or sell or whatever are getting upset because the stock is dropping for, market forces. Meanwhile, they think it's happening because they're being prevented from taking a certain action over another. And so, I think there's going to be a reckoning. I think there's already starting to be a reckoning on, Robinhood's revenue model of payment for order flow, for example. And we're seeing some of the other competitors steer away from that or try to steer away from that. So it's really going to be a very interesting time in the next couple of years in the retail investing space to see what shakes out, what starts to be required from a regulatory perspective, and ultimately who's going to be, kind of the winner at the end of the day. Hopefully it's the small retail investors, right? But ultimately, I'm assuming that corporations are going to do just fine anyway, too.
I think, who writes the rules is oftentimes the ones that can afford the lobbyists. But hey, I just want to remind everyone, there is no free lunch. It's a long-term horizon. That's what wins out at the end of the day. Tara Falcone, it is always a pleasure to catch up with you and the folks at Rise Up. Have a great rest of the day, and we look forward to having you back again very soon.
Thanks so much, Jeffrey. Thank you very much.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, this time for BRN Weekly. We've got a very special guest, and we'll take a look at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.